Hi, guys. Welcome back to the Pi Podcast. I'm your host, Irene. As usual, share, like, and subscribe. So, we're going to touch on the changing world order. Is this a conspiracy theory or is it a phenomenon that actually has impact on the economy? And how does that translate to your investment portfolio? And what should you do to be able to ensure that your portfolio is resilient and changing and reflecting essentially a position that is putting you in the best footing to be able to thrive from said conditions. So, the changing world order is essentially when existing or the dominant superpowers begin to decline and then the emerging powers begin to take over. So, if you think about the Dutch Empire, that was taken over by the British Empire, which was then taken over by the US. And as it stands today, the US dollar is a currency that is actually used as a reserve across many central banks across the globe because countries essentially relied on it as early as 1944 to be a steady and reliable currency, right? And so, for that reason, it's a currency that was attractive to many nations and it was one that was used to trade across different nations. And so, that would make sense that many countries have that as a reserve currency. Now, what's happening as a result of that is because the American currency is quite strong or was quite strong at the time that it became the dominant superpower. Just to give you a bit of history on this, the dollar was actually backed by gold at some point in time. And because the gold reserves, I mean, it probably was hard to trade in gold at that point in time, take a gold bar and exchange it for what, right? So the government came up with a system where they would print notes and you could take those notes to the bank and it would equate to a certain value of gold. So the currency was always backed by gold. And later on, between 1944 and 1971, things would have been working quite well, but then the government got into a point where there was a bit of stickiness around that because they were essentially not able to back or fully back the notes that they had printed with the gold currency. So the president at the time, Nixon, said that they were going to sort of uh, take away gold as an asset that backs their currency for some time, and they'll just go ahead and print out money and make sure that that money is sufficient within the economy. Now, what happens as a result of that is that if you don't have anything or an asset backing your currency, it means that you can just go and print and print and print money. What actually confirms to you the value of that money? Because if the government is able to just print it, then they keep printing it to the point that the currency now begins to lose value. So since that point in time, gold has never backed the American currency, and we've seen different cycles. So if you think about the 2008 financial crisis, where the U.S. government went and printed out significant amounts of money, dumped it into the economy to be able to boost spending, to boost businesses, and to get themselves out of that pickle. We can see that at that point in time, other nations were getting a bit nervous because the confidence in the dollar was waning. However, a couple of years later, we see that it began to pick up again and the economy was thriving. Now, fast forward to 2020, when there was the COVID pandemic, the US government goes out and prints significant amounts of money and pushes it into the economy to enable that spending. And now you've got a whole bunch of countries with the US dollar as a reserve currency observing and thinking, well, if this currency is not backed by, gold as it used to be, then these guys are just printing and printing money. The value of this currency is actually getting to a point where it's not as valuable as it used to be. We're seeing significant inflation. Can we trust and can we rely on this currency? And we can see many countries are now replacing the percentage of dollar holdings in their reserve currency with gold. So if you look at gold performance over the last, I would say, maybe 10 years, you'll see that gold is on an upward trajectory. Now, why is gold an attractive asset to hold? It's attractive because it sort of resists inflation. And if you think about holding cash, right, your spending power, if you held, say, £20 in 2010 and you're holding £20 today, actually what it can buy you is significantly different because of inflation. So you get less for £20 today than you would get for £20 in 2010. So The reason why gold is a good hedge against inflation is because gold is very rare. So you can't just go and decide to mine gold. It's a precious metal. The quantities of gold are limited, and so it continues to hold its power. Now, if you think about, let's go back to 1985, where house prices at that point in time, I'm thinking about the UK now, house prices at that point in time would have been about 27 to 30,000 pounds. And house, that's the median house price. If you fast forward to today, house prices in the UK, on average, the average house price is £300,000. Now, take the price of gold today, take the price of gold in 1985, and when you do that math, you realize that if you held roughly 110 ounces of gold in 1985, you would be able to afford the median house price back then. And if you take about 110 ounces of gold today, then on average, you're able to afford a £300,000 house. So it just means that gold is actually a currency that is a store of value. Now, I'm just going to say that this is looking at those specific time points because what has happened since the COVID pandemic is that, well, gold has this characteristic of, like the stock market as well, when it rises, it's then followed by a period of a slump. So if we look at 2008, between 2008 and 2015, gold was performing steadily. However, from 2015 to 2025, gold has been on an upward trajectory. Now, it's one of those assets that we say is good to have in your portfolio because it's a good, first of all, as we talked about, it's a hedge against inflation. And the second thing, it's a good asset to diversify your portfolio. Now, what does this mean for you as a day to day investor? So, the price of gold has actually gone quite high. And we don't want to speculate and say that, oh, it's going to keep going up or it's about to hit a dip. So, we don't want to invest in it. We've talked about dollar cost averaging, right? Which is where you sort of feed your money into your portfolio using a consistent approach. And over time, the price there is going to even out. However, because you can hold gold through ETFs, you can also hold gold through uh, essentially actual bars of gold. And so, if you decided to do that, if you go and make a purchase of gold, it means that you have to have somewhere to store it, right? It's actually one of those assets that sits outside of the financial sort of central bank system. And you can hold it, you don't hold it within the central bank, you actually hold it as your own asset. And depending on where you are, there are probably different tax advantages and VAT advantages that come from this type of asset. And that is predominantly based on your individual circumstances. So it's always worth looking into that to see if there's any advantages that you can gain from it. The other way we've said is through your ETF. So you can invest in companies that directly hold gold, or you can invest in companies that operate in that specific sector. So they could be gold mining companies that you're investing in and getting exposure to that asset class in that way. So I've already mentioned that a lot of countries are reducing the amount of US dollar within their portfolio because there's, a drop in confidence in the US dollar. And that's a term that we refer to as de-dollarization. So de-dollarization is not a new phenomenon. Actually, we've had countries like the BRICS countries, which have over time been trading in currencies outside of the USD. So if you think about Brazil, Russia, India, China, South Africa. Those countries are what we call the BRICS countries. And we can see that emerging markets are generally looking for ways to be independent of the USD and find other ways to trade. Now, another thing here that is driving the sort of lack of confidence in the dollar is because America has used it as a weapon in the past, it kind of makes other countries look at that as a risk for them as part of their central banking system. So let's think about Russia invading Ukraine. What happened there? Russia obviously held the US dollar as part of its reserve currency. So they decided to make a sovereign decision and invade Ukraine. However, Ukraine is an ally of America, and so the Americans don't appreciate that the Russians have attacked Ukraine. They then put sanctions on Russia's ability to spend dollars. And so other countries observing this are thinking, well, if we get to a place where we do not agree with the US and we decide to do something different to what they like, would they then put us in a position where we are facing sanctions similar to what happened to Russia? So for that reason, you see countries like China beginning to de-dollarize and invest more and more in gold as a reserve currency. Now, we've talked about gold being a hedge against inflation and gold being a store of value. So, what we're saying here is that by storing its value, gold is not an asset that you invest in because you want to get some type of investment return or growth from that. Actually, it's an asset that you use to hold the value of your money or to store the value of your money. And so, because gold is very good at storing value, you might find during periods of conflict, then generally governments prefer to have an asset that holds value as opposed to holding cash assets, which are possibly going to erode in value. Now, part of this changing world order over history has been led by things such as new technologies and has also been led by geopolitical conditions such as war. And more, we're beginning to see conflict arise across the globe. So, what should you think about as an investor when the conditions are looking as they are? Gold is an asset that will hold the value of your investments or will hold its value over time. And another asset that is sort of propped up by gold is silver. Silver is one of the best conductors, actually. And so when the price of gold goes up, the price of silver goes up as well. And silver tends to have a very high correlation to gold. We've talked about gold not having a similar correlation to equities and bonds. And that's used to diversify your portfolio. But if you're thinking of other assets that are sort of in line with gold that can allow you to diversify your portfolio, you're potentially thinking about silver as well. And again, the demand for silver, as we're seeing over the next, 5 to 10 years, is going to be quite high, but the ability to meet that demand is questionable at this point in time. And so, gold and silver are potentially assets that would be considerable to include in your portfolio as somebody who is looking to diversify. Now, I'm not a financial advisor, so it's always good for you guys to go back and have these conversations with your investment advisor and see if it fits your profile of investing. Real estate as well tends to be an asset that is sort of resistant to inflation. So if you're thinking about gold, you're thinking about real estate, you're potentially even thinking about digital currencies such as Bitcoin, because remember that we're in a point in time where new technology is heavily in play and governments are also building up or developing their own digital currencies. And if you're thinking about how to take advantage of this as an investor, digital currencies on average take about 5% and less of established portfolios. And so, if that's something that you want to consider in your portfolio, it's worth checking if that aligns with your portfolio and your style of investing. So, aside from those type of assets, other things that you might want to consider in your portfolio when the economy is looking so uncertain is thinking about diversifying your investments geographically. We've touched about this in a couple of different podcasts, and so I think it's something that is worth considering. Speak to your investment advisor and see if diversifying across regions as well gives you exposure to other types of currencies and other types of assets that are going to be well suited to giving your portfolio that resistance. Because remember, if the certainty around the US dollar is dwindling, it then potentially means that the value of the dollar is getting weaker and weaker, and that will then have a knock on impact on the stock market. And so, if you're heavily exposed to US dollar stocks, you might want to begin thinking about diversifying across regions to be able to have uh, a better resilient portfolio. Now, what are the risks associated with this type of investment? Gold, as I've said, is not an asset that is going to build your wealth, it's an asset that is going to store your wealth. If you hold gold, it's essentially acting as an insurance policy against dwindling currencies. And again, if you're holding physical gold, you want to think about the storage costs associated with it. You want to think about the safety, right? Because you could either store it at home, which I think is quite dangerous, but some people don't mind doing that. And other people will prefer to store it in a vault. So if you are storing it outside of your home or outside of your person, then it's potentially something that is going to cost you a little bit of money to be able to do that. The other thing is this, because we're seeing gold is at an all-time high at this point in time, then it's also challenging because we cannot time the market. We could easily say that between 2008 to I guess 2015, it took about 7 to 8 years for gold to sort of pick up in value again. And at that point in time, you'd say, well, I guess 2016 is a good time for me to start investing in gold. And you potentially want to hold those gold stocks until, or the gold asset until perhaps 2025. When you think about, okay, is it at the peak? Is it going to rise any further? It's impossible to time the market. Now, you can't say that because it's at an all-time high, it's going to drop, and I'm waiting for it to drop so I can then invest in it. But the thing is, we don't know when that's going to happen. But as I've said, the peaks and troughs tend to happen consecutively. And so I wouldn't be surprised if we saw a decline in the value of gold over time. But we don't know when that time is going to be. So I hope today's episode has been useful in giving you insight into the changing world order, diversifying your portfolio with gold, diversifying your portfolio geographically as well, and thinking about assets that are have a high correlation with gold and have a low correlation with a lot of the other assets in your portfolio. So you can essentially have a portfolio that is resistant to economic conditions. Thank you very much for joining me today, and I will see you next time. Bye for now.